I'm Brian Moretta. I'm head of tax advantage research at Hardman and Co. So having talked about introduced a couple of people that I've known for a long time, I'm introducing a firm that's still relatively new to me. So River Capital is a firm whose name is really pretty new because it's a rebranding, but I think, as I'll maybe talk about, they've got a substantial pedigree. We've got a double act. So we've got Dr. Marc David and David Walters. So I'm going to hand over to them.
Thank you, Brian. And good afternoon, everyone. My name is Marc David, and I'm the head of venture at River Capital. I'm joined by my colleague, David Walters, who's the investment director on Fund AI. And I'm going to tell you a little bit about River and what we do, and then I'll hand over to David, who can tell you a little bit more about the fund itself. First of all, just to say, this is a regulated product and all the usual disclaimers apply. So River Capital is a manager that manages multiple funds. We're based in the northwest of England, and we're part of a group that was established in 1994. So we've been around for 30 years. We manage about 100 million quid, and we've got a variety of investors, which includes pension funds, money from banks, money from the British Business Bank, balance sheet money, and also from high net worth individuals. Since inception, we've deployed over 200 million quid across equity and also debt products. And in doing that, we've supported over 2,000 businesses and leveraged over 350 million quid alongside that. Just to give you a bit of a sense of scale, the team now is over 20 FTEs. And if you include various fractional resources, there's probably something like about 30 heads or so. And here are a few of those heads. In the interest of time, I'm not going to go through all of them. I'll just highlight a few. One is our chairman, John Walker, who was a founding partner at Equistone, and before that, he was 20 years at Barclays Private Equity. My colleague Martin Sutton, he was employee number 4 at PKI, which is one of the success stories of artificial intelligence in the UK and in the North in particular. My colleague Steve Charnock, who's the chair of our investment committee, he is the founder of both Senkos and Seneca, and is an entrepreneur and investor in his own right. And last, but definitely not least, David Walters, who you'll hear from in a second, who's a member of the Data IQ 100. He's got substantial operational experience running various AI practices. He was the first digital and data director at Northwich Capital, who his job was to take the data from the portfolio companies to drive value. And he has a series of exits under his belt as well. I'd just like to linger a little bit on those exits. So Fund AI itself is a relatively young fund, but River, as I say, has been around for 30 years in various guises. And we have multiple exits under our belt. And I'd just like to take you through a few of them. So one of them is a company called Blue Prism, which was a robotics process automation company, which we invested in 2006, which ultimately floated on AIM and reached that fabled unicorn status of being worth more than $1 billion. It was actually worth more than £1 billion at its peak. We've also exited Vitaflow, which is a clinical nutrition provider, which we sold to Nestle in 2010. Ceres, one which is particularly close to my heart, which was stents for strokes, which was acquired by Stryker and delivered a return of up to 15 times the capital invested. And then just another 3. Tiger was a management buyout that delivered an IRR of just under 40%. That was middleware for the hospitality market. Centriforce, which we sold last year, which was recycled plastics in the utility, agricultural and landscaping sectors. That was 8 times return on money, 30% IRR. And then perhaps most sort of pleasingly, Carebeans, which we invested in before Fund AI was launched, but which would have met essentially all of the criteria for it to be in Fund AI. It delivered a 3 times return. It was a whole period of just under 3 years and a 60% IRR. That was software for the sort of care sector. And that was delivered by David, who I'm going to hand over to in a second. Just to put a little bit of color on that last one, this is the Carebeans team at their exit dinner, after we sold the company. You can see there Nick, Jeremy, and Ashwin in high spirits. We actually introduced Ashwin as the chair, as he'd been a chair in one of our other companies. And with that, I'm going to hand over to my colleague, David.
Good afternoon, everybody. As if by magic, Mark's turned into David. I'm Dave Walters. I'm the investment director at River Capital Fund AI. Fund AI is the North's first dedicated artificial intelligence fund. It's an EIS fund. We launched it in November 22, just before the explosion of generative AI. The reason why we launched Fund AI was because in other funds, we were constantly seeing businesses that had a lot of data, which wish to go on these AI journeys. As Mark says, I've run AI practices. I've exited large data businesses, and we are a unique blend of operators and also fund managers. So I think AI is probably the most significant global emerging technology, and in the UK we're good at it. We as a country are probably third in the world in terms of the amount of AI businesses and the investment that goes into this space, behind the USA and China. And central government are supporting artificial intelligence investment all the time. But AI is not new. If you were to believe the press, it kind of launched in 2023 with ChatGPT and OpenAI. But we've been working in AI for decades collectively, and it's not just Gen AI, it's not just generative AI, it's not just ChatGPT. It includes robotics, natural language processing, computer vision. We are most interested in businesses that have got lots of data. That's where our superpowers are. We believe that businesses and management teams that recognize the value of lots and lots of data can build out deep IP and consequently create significant multiple arbitrage. There's a phenomenon called AI washing right now. So every company on the planet seems to be an AI company. What we bring to our investment diligence is a real expertise around what does good AI look like and what does slapping in a bit of Gen AI look like. We don't do the latter. We're looking to invest in companies that have got some really interesting technology. A little bit about the fund. Again, we were the North's first dedicated AI fund. Let me just move my screen a little bit. We target investment rounds of up to £2 million. All of our investments are alongside co-investors, many of whom you will recognise. We don't wish to underfund the company. Our target minimum return for a portfolio is 4 times. Whenever I'm diligencing a company, I'm looking to see a path to 10 times, but we talk about a 4 times overall return for an investment portfolio. We haven't yet invested in a pre-revenue company. We see a lot of AI companies coming through our CRM, and so far everything has been revenue generating. So I kind of expect a minimum company turnover of 250,000. Our most recent 2 are turning over £2 million and growing fast. For our investors, we look to create a portfolio of 8, a target of 8, 6 to 8, and we look to deploy that cash within 12 months of investment. Minimum check size 10k for an investor, up to about 250k is typical. So why the North? Long story short, we think the valuations are lower up here. Around about 60% of all technology and specifically AI investment is focused down into the southeast and Cambridge. There is a ton of great AI companies up north, and we have this strap line that we are investing in underfished waters in the north. So we made investments in Edinburgh, we made investments in Cardiff. Our sweet spot's probably around the northwest and West Yorkshire, and everything to each side of that geography. Our first investment was the summer of 23. We've made 7 investments so far. They are we're not particularly specific in anything. What I would say is we're not investing in the next OpenAI, which, is incredibly interesting from a technology perspective, but perhaps has a very slow return for investors. We're looking for businesses that are trying to solve real life problems, and those businesses have a lot of data. They're perhaps employing data science teams, they're using machine learning, they're creating their own algorithms, they're being really smart around generative AI and combining their own data sets. We have 2 soft closes. We do that deliberately so that if an investor wishes to invest into Fund AI, we give them immediate portfolios and therefore very quick EIS3 certificates. And here are 3 examples. Mojo CX we completed in January this year. The business is turning over £2 million. It creates artificial intelligence contact center software. It's got some great clients like Asda, Morrison's, Costa Coffee, already turning over £2 million revenue. We're co-investing alongside Procura and Foresight, and they've just won a new deal for £1 million a year from a large BPO. And it's a great valuation. And if you wish to find out more, I can tell you more about that. But, you know, these northern valuations are important. Another business called Hyperfinity hasn't quite hit the wires yet, but it's a leads-based decision intelligence platform. Once again, with some great clients, again, turning over £2 million, a good valuation. Again, I can tell you what that is, should you be interested, and won another £1 million contract with Salco. And then finally, back in November, we completed on a agritech business called Fortenix, still open for investment. It's a Manchester University spin-out. It's in revenue. It's well funded. We have brought a co-investor alongside us to make sure that the business has got plenty of firepower to go on its journeys. And all of these companies, we provide artificial intelligence support, networks, ecosystems, advice, etc. So these 3 businesses close in March, at the end of March, and should anybody be interested to find out more, please get hold of us quickly. And then finally, the only picture with Claudia Winkleman on, I suspect. We won the GrowthInvest 2023 New Product of the Year award, which we're very proud of. And this year we were also finalists in the Growth Investor Awards for the up-and-coming EIS fund. Thank you very much.
Great, thank you for that, Mark and David. And I do hope that last picture wasn't AI generated with Claudia there. Question: as a fellow Northerner, I fully appreciate the focus on the North. Is it exclusive? If you found the right valuation for a not Northern-based company, would you look at them too?
Yeah, I mean, we reserve 20% for outside of the regions, because you're absolutely right. If somebody comes to us and say, tells us about a company that we're super interested in, we want to be able to give ourselves the capacity to invest outside of the region. But valuations are really important, Steve. Typically when we see those opportunities, they're just too high for us. We want to be able to, as I say, try and get to that sort of path to 10 times. And if the business is valuing itself at £20 million, we've got to sell it for 200 million. So, but yeah, we have a 20% capacity.
Cool, good to know. You mentioned as well, obviously AI is not new, it's been around for a long time, but it feels like it's fairly new. It's a very fast moving environment. What challenges does that bring to both yourselves as a manager and to the companies?
I think, I'll give you an example. DeepSeek is a Chinese-based large language model which is doing something called reasoning. It's been out for 3 months, and it's already being used on the Chinese stock exchange to help traders to make the right decisions. That you can see how that could be a double-edged sword. Some businesses may feel that they can start to integrate those sorts of large language models into their workflows. We've got lots of businesses across our portfolio who are using LLMs really well, and they've got some good stories and they've got some bad stories. And that's one of the things that we hope that we can bring to all of our investments. We've now got a cohort of businesses all thinking about the same sorts of problems and how to adopt them and when to adopt them.
Lastly, DeepSeek, has that made a big impact on valuations? Has it been a game changer or just a noise in the long road?
Well, without getting too technical, one of the things that DeepSeek are doing really well is is how to use the hardware underneath a large language model. So there are three things that create artificial intelligence. One is maths, one is data, and one is processing power. The Metas, the Googles, the OpenAIs of this world are spending a ton of cash, hundreds of millions of pounds on that processing power bit. DeepSeek have found a way to do that at an absolute fraction of the price. You know, their latest LLM's only been out for 3 months, so nobody wants to be a guinea pig yet to actually work out how to use that properly. But it could be transformational in terms of the way that artificial intelligence becomes even more democratized for businesses.
Great, thanks very much. I'm going to hand you back to Brian.
Thank you very much to Mark and David. Always good to hear about what the hot areas are doing and how they're actually nothing new under the sun is also as well. Thank you very much to everybody for attending and staying to the end. And we look forward to seeing you hopefully on another webinar soon. Thank you very much.